From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. Coming up, a U-turn for Tesla. Shares rise as Musk vows to pull back from DOGE.
Plus, news of potential job cuts send Intel shares soaring.
And Cantor Fitzgerald teaming up with Tether and SoftBank to start its own crypto firm, led by Jack Mallers. We have him live later on in this hour. But first, let's check in on the markets. And Bitcoin is on the higher side, but so too are stocks. Let's look at how the Nasdaq is currently adding to a two-day gain that is the best two-day gain in about 10 days. Since April 10th, well, actually about 2 weeks now, we're adding about $600 billion in terms of market capitalization to the Nasdaq 100. And I'm looking at the Magnificent Seven. It really is big tech on top. We're up 4.8%, Ed. What are you looking at on the micro?
I'm looking at Tesla and a stock that is up 8%. And frankly, it is shocking when a company misses earnings by that wide a margin, which we'll go through later in the show, and the stock reacts in this way. And it's about a single story. Elon Musk, key man risk, and him saying, next month, May, I will pare back the amount of time that I'm spending on DOGE, and I will allocate more time to Tesla. It's exactly what the market wanted to hear. And we, throughout the hour, are going to go deep on that name because it's such a critically important one, Karen.
Let's talk a little bit more about U.S. Treasury Secretary Scott Bessent. He's soothing the markets further with a recognition that America first does not mean America alone. He also showed for the IMF and World Bank, he showed some support, but he spoke of the need to course correct. Bloomberg's Kaylee Lyons has more from D.C. This seems to be a calming, a soothing to the market that's going on right now.
Well, yeah, and you're seeing that evident in the price action today, Caroline. This is just another instance of a kind of a tone shift we have seen from the administration over the last several days, as there has been, of course, a lot of disdain for multilateral institutions emanating from the Trump White House. Scott Bessent, to some extent, putting the worst of those fears to bed, saying that the administration is willing to work with the IMF and World Bank so long as they keep to their missions and avoid what he called mission creep, focusing on things like carbon footprints or climate change. He also, to your point, the key line that investors likely will seize on here is America first does not mean America alone, kind of underscores that this administration is trying to pivot away from perhaps the worst case scenarios the markets had considered around American isolationism and protectionist policy. Keeping in mind that today's speech came after Scott Bessent yesterday told a closed door meeting of investors that the current tariff situation with China specifically is unsustainable, that he expects a de-escalation. President Trump then followed those remarks, speaking in the Oval Office to reporters yesterday by saying he does expect a deal with China and that the ultimate tariff rate will be well below the 145% where it currently stands. And of course, we got some fresh reporting from the Wall Street Journal today that the administration could be looking at cutting those tariffs on Chinese goods by as much as half, in the range of 50 to 65%, depending on the product and whether or not it is pertinent to U.S. national security interests. So we're seeing kind of a walking back of some of these most extreme policies. I would point out, though, President Trump right now is speaking with reporters on the North Lawn of the White House and still reiterating that he thinks both China and the European Union have been ripping the U.S. off, though he reiterated he does think they will get a fair deal with China.
Bloomberg's Kaylee Lyons in D.C. Thank you very much. Let's turn back to Tesla. The company's rise in the markets today can be attributed to one key moment on the earnings call yesterday. Starting
probably in next month, May, my time allocation to DOGE will drop significantly. I'll have to continue doing it for, I think, probably the remainder of the president's term, just to make sure that the waste and fraud that we stop does not come roaring back.
Elon Musk saying he will allocate more time to Tesla starting in May, reducing his DOGE activity. For more, let's go to Bloomberg's Esther Day. And I go back to, irrespective of what Musk just said, on the top and bottom line, this was one of the worst quarters for a long time. But Wall Street and investors around the world are looking past that.
Yes, that's absolutely right. I mean, whichever way you slice these numbers, these were absolutely terrible numbers, numbers that have not been seen in like years, for especially when you go to first quarter comparisons. Despite that, expectations were that numbers will be terrible, so that was kind of built into the stock, and that exactly is what the stock market is telling us. Like, the stock is up 5-6% last I checked, and a lot of it is really coming on from the fact that Musk is now saying that he will start pulling away from his government work and kind of focusing back on Tesla. And this is exactly what investors were hoping to hear.
Now up 8% near session highs, Bloomberg session day. Thank you very much. For more on Tesla, William Stein, Truist Securities Managing Director, joins us now. He maintains a hold rating on the company with a price target of $280. You know, Will, you're traditionally a semiconductor analyst, right? You think about compute and you think about AI. But I did note in your research that you, even against your own models, the fundamentals of this business missed by a really wide margin. Just take me through that data set that you have, and then we'll get onto the other stuff like robotaxi and AI.
Yeah, I don't mean to be disagreeable or controversial, but I want to say very clearly that that when we look at results of companies, it's important to understand both the broker or sell side aggregate consensus, but also the buy side consensus view. The company had already updated investors and the street with delivery numbers about a month ago. And I think many investors had not updated, or at least on the sell side, had not updated models. So when you compare versus sort of the so-called consensus numbers, it looks like this huge miss. But in reality, relative to our model that had been updated, and I think compared to other models where if you looked at just the consensus of updated estimates, the miss was not very big. In fact, relative to our model, only 1.5% on revenue, actually beat on gross profit, missed on operating profit somewhat, and they missed on EPS by 6 cents. This was not like some disaster, at least relative to what we were expecting following the update a month ago. They were somewhat disappointing results. Relative to what we expected, the disappointment came in two places. One was in energy storage and generation. So you think about solar roof and megapacks and that sort of thing. And the other was operating expenses, where they accelerated some AI R&D investments. And that's, I don't think, the end of the world for investors. In fact, one could take a positive spin on that.
William, I get that perhaps it doesn't miss versus downgraded expectations, but a profit drop, the worst profit number since 2021, a revenue drop nevertheless shows real fundamental issues here. Are the fundamental issues going to be alleviated by more time spent at the company by Musk?
Oh, I think in at least two ways, right? I mean, the two sort of obvious ways are, number one, if you accept the supposition that Musk's, in the way that the investor relations team has described it to me, that his greatest superpower is in delivering huge technological advancements by spending very little money, but just very focused talent, then it's a big positive from that perspective. And the other is to moderate what I think Musk characterized as political sentiment. I think spending less time in the public eye doing government projects will be good for the stock.
We want to thank you so much, William Stein, who's been joining us from Truist Securities. I know you're a man who focuses a lot on the AI opportunity, a lot on the semiconductor space as well, so we appreciate your time today. Meanwhile, though, coming up, we're going to get more on semiconductors. Intel planning more than 20% of job cuts ahead of earnings tomorrow. More on that scoop ahead. This is Bloomberg Technology.
Let's look at Intel. Shares surging after Bloomberg reported the company's looking to cut more than 20% of its staff. It would be the first major restructuring under new CEO Lip-Bu Tan. Bloomberg's Ian King joins us with more. This is based on what a source told us. And yes, there's a bloat issue, right? But there's also a refocusing issue. Reading the report, it's like get rid of middle management and focus on actually making some money on technology that's competitive.
Yeah, I mean, I think our understanding from our sourcing is that the problem is the decision-making at Intel has become bloated, that everything that should be happening quickly isn't happening quickly. There's a lot of meetings, a lot of empire building, a lot of silos that need to be swept away in order for them to get back on track and to try and catch up with competitors like NVIDIA.
And all eyes on how they can make moves in AI. Ian King, we appreciate it. It was a great scoop that came out. Meanwhile, looking at the broader tech markets, we've got Encore Crawford with us, Alger portfolio manager, who can speak more broadly to the tech space, but just going to this need to focus in on generative AI, the opportunity by a company like Intel. Is it still all about AI? Are we able to focus on the long-term opportunity when you've got headlines just now from Trump saying, well, that the US will have a fair deal with China?
Yeah, look, AI is the next revolution that we have to chase. So it is important that Intel fixes its house. But, I think Intel has kind of lost the game on AI. What they have to figure out is if they can hold the kind of prowess on manufacturing and catch up with TSMC, because that becomes a more strategic imperative than being able to develop a competing AI chip to NVIDIA.
How I saw manufacturing that was meant to be coming more to home, Ohio, for example, that then gets pushed back because of current quandaries about whether there's going to be government support for the CHIPS Act anymore, whether there's going to be money coming from the government. How is Intel or any chip maker currently to navigate whether they invest in the US or not?
Well, definitively, we need to invest in the U.S. I think the administration has made it very clear. I think it is a necessity that we start investing in the U.S. So I am completely on board with that. I don't actually think that the lack of CHIP Act funding is the reason that Intel is not investing in the U.S. I believe that they've actually lost the benefit of being first. And they are struggling with going from one node to the next. We'll see where they are on 18A, which is the next node. But as of right now, they're still outsourcing to Taiwan Semi, which shows you that, in fact, TSM has taken the lead on these last few nodes.
And we will find out more Thursday evening when Intel posts numbers. I think they'll have to answer a lot of those questions. Earnings is so interesting, right, in the context of everything happening around the world. I want to bring up this chart, which is average EPS surprise. And we're still kind of rattling our brains a little bit, Anka, about the Tesla share performance in this session relative to the numbers it posted. And the reason I like this chart, I find it so interesting, is that actually Tesla has a terrible track record compared to the other Mag 7 names in positive surprise on EPS. That's all to say, do you think that given the macro environment right now, all of these names might get a bit of a pass this quarter?
Yeah, I think sentiment has gotten so dire that many of these companies are putting up okay numbers. Like you look at iSurge yesterday in healthcare space, the numbers were okay. However, it was better than expected. Tesla, the same way. The numbers were okay, but they talked about, I think, some of their growth drivers, which are humanoids. They talked about how they're going to have autonomy by the end of this year. I think he said millions of vehicles by the second half of this year. And even if it's not second half of this year, as long as there's a roadmap to true autonomy, I think that's what's going to drive the next leg in Tesla, not necessarily the margins on the auto side.
They also pulled guidance. Do you expect that to be a move elsewhere in the Mag 7 names?
I think that we could get many companies not actually giving any guidance because the uncertainty is high. So if you're a CFO or a CEO trying to navigate this market, you really have a hard time right now because, what do you guide to? Do you guide to 145% tariff or 40% tariff from China? Do you guide to, and what you're seeing today, for example, in Vertiv basically has assumed, or in iSurge have assumed, full tariff impact. So, iSurge last night, the CFO said 145% tariff is what they have included in their guidance and have guided that way, and just in order to buffer any kind of impact on their earnings.
You say it's difficult for a CEO, a CFO to navigate. Boy, is it also difficult for you, an investor.
Oh, for sure.
So do you remain committed in the longer term? Do you stick to the longer-term narratives that have driven these stocks higher over the last couple of years? Or do you pause? Do you take money out?
So So I think if you haven't taken your money out already and protected yourself, now is not the time to do it. So that's the first thing. Secondly, by September, I will go out on a limb and say by September we are no longer going to be talking about these trade wars. And we will have moved on to something else, and maybe we'll be looking at the midterms and how great the economy is doing, but it won't be the trade wars. So I think this is a kind of a short-term focus geopolitically to play a game that the U.S. The administration is currently playing. However, it will be behind us shortly. As we move forward, the AI trade is still very, very prevalent. And there's no escaping it. That train has left the station. So, yes, we will start again. And, right now there's some very compelling opportunities in the market.
Should America's biggest technology companies prepare for a recession?
Tough to tell, and I think it's a binary answer, and in part because the policies are going to dictate if we go into a recession. So, if we do have a 145% tariff and we keep ratcheting up these tariffs on foreign goods, and we have a retaliatory effect, yes, we are going to go into a recession, and I would say that there would 90-some% probability that would happen. If we can thread the needle and not be quite as aggressive, the situation changes, and maybe we have a bit of a soft landing at 1% GDP growth instead of negative GDP growth.
Encore Crawford of Alja, great to have you on the show. Thank you very much. Now, coming up, big tech facing antitrust pressure in the United States and EU. We'll have the latest. Caro, you got some breaking news.
On antitrust, we understand that the DOJ antitrust officials are currently looking into Walt Disney, Ed, the deal to take a controlling stake in the streaming company Fubo TV. Fubo, as you see, off by 3% on that news. This is Bloomberg Technology. The European Union, it's fined Apple and Meta for violating its tough new antitrust rules for big tech. Now, the fines total 700 million euros, about $798 million. They're actually relatively modest compared to previous EU fines, and it's likely to be thought to be avoiding further provoking President Trump. For more, let's bring in Bloomberg's Sam Stolten. But it's provoked the ire of Apple and Meta. They've got some fighting talk in response.
It has indeed, yes. Hello, Caroline here from Brussels. Yes, well, Apple has said that it will actually appeal this fine, and it's about 500 million euros against the California firm. And Meta has gone even further with Joel Kaplan, who, of course, you'll remember, spent quite a few years himself in the White House, but now Meta's global head of policy, saying that this is a discriminative act from the European Union and that it is continuing to unfairly target American businesses. So it's certainly a ratcheting up in these transatlantic tensions. Indeed, Meta's fine itself was a bit less than Apple's. It was only 200 million, but generally, despite these fines being lower than traditional antitrust penalties, they still haven't particularly pleased firms on the other side of the Atlantic.
The logic being that because they're lower than historic penalties, they won't draw the ire of President Trump. He won't retaliate. But I think that a spokesperson for the EU that we spoke to for the story points out that this had nothing to do with trade, Sam.
Yeah, I mean, that's the message coming from the European Commission. This is an independent regulatory action. It's got nothing to do with the trade talks whatsoever. But the scuttlebutt here in Brussels and around town generally is that, of course, the EU has had powers under the Digital Markets Act to fine these companies up to 10% of global annual revenue. And actually, these fines are less than 0.15% of global annual revenue for both Meta and Apple. So there is something that is holding the EU back here, and it is more likely than not, despite what the European Commission says, these ongoing trade negotiations.
Bloomberg's Sam Stolten in Brussels. Thank you very much. Another story we're tracking. The co-founder of Instagram says the photo-sharing app could have thrived without Facebook's. Kevin Systrom testified that Meta CEO Mark Zuckerberg treated Instagram's growth as, quote, threat and starved the app of resources after the purchase. The US government seeking to prove the social media giant created an illegal monopoly through its acquisitions of Instagram and the messaging service WhatsApp. Kara.
Yet more antitrust cases going on, Ed, and the Justice Department's effort to break up Google is one of them. Bloomberg's David Alba joins us on the latest out of what is trying to find remedies to ensure that Google no longer seems to be a monopoly. One of those remedies the government wants is to sell off Chrome, and seemingly there's a buyer for it.
Yeah, we heard in trial testimony yesterday that the head of product for ChatGPT, Nick Turley from OpenAI, said that OpenAI would be interested in buying Chrome if it were actually for sale. Google, of course, does not intend to sell it and is fighting sort of this remedy that is proposed by the DOJ, but they will see how the rest of this remedies trial goes and what Judge Mehta, the judge in this case, eventually decides.
Davey, a point of intrigue is that Chromium, the underlying code base for Chrome, is open source, right? And I think Google will lean heavily into the idea that in the browser market, that's a really good thing. Has there been any debate of that so far?
Yeah, absolutely. Google's defense in not wanting to spin off Chrome is that, look, the underlying technology for Chrome is open source and it's used by different browsers from different companies, including Amazon's Silk browser. But the DOJ still contends that Chrome is a key gateway into the internet and internet search specifically. And if it were to be controlled by another party, then that would help sort of break up the power that Google has about users' data, users' queries, everything that feeds into Google search and improving that product.
Bloomberg's Davey Alba, thank you very much. We have some breaking news crossing the Bloomberg terminal. Treasury Secretary Scott Bessent says that there has been no unilateral offer from Trump to cut China tariffs. He is speaking to reporters on the sidelines of the Institute of International Finance event in Washington, where he was giving a keynote. And this is the key wording: no unilateral offer from Trump to reduce tariffs on China. There have been earlier reports, of course, from the Wall Street Journal that the president was considering a tiered approach to tariffs, but the wording here incredibly specific. He also has been commenting on remarks by the president about firing Federal Reserve Chair Powell, saying that in Bessent's case, the Treasury Secretary, quote, does not have a stand on the Trump-Powell firing remark. And, Caro, that's something in the markets context with the NASDAQ 100 pushing up 3.1% that we've been tracking closely.
Off of its highs, but still trading up on the day. Meanwhile, Ed, coming up, we're going to take another look at Tesla's earnings and what Elon Musk tells investors that he'll be pulling back from his work at DOGE. Is there more focus on the business and rectifying what has been a more than 40% sell-off so far this year? This is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco. Caro, some moves in the markets.
Boy, are there moves. And we remain higher on the NASDAQ, up more than 3% on the NASDAQ 100, even as we try and digest some of the overall headline risk, whether or not we're seeing a cooling down of tensions around China, whether we have Trump having some more positive narrative towards the country. But Scott Bessent coming out clearly saying, look, there is no full China trade deal yet. It's going to take 2 to 3 years. So we come off of our highs a little bit. We're up 2.8%. No unilateral offer from President Trump to cut China's tariffs as yet. But we look underneath the hood, some of the individual stocks that are on the move. I want to shine a light on European trading. We just finished. SAP surged 8.8%. We had the best innings in 6 years. They post really strong profitability and a great backlog for their cloud orders. What does that mean for the company that is run by Bill McDermott, which is ServiceNow? Of course, he used to run SAP over in Germany. Now he runs ServiceNow, up 6.7%. Their earnings after the bell. Will they post some resiliency? Remember, they're exposed to some of the DOGE cuts across government. So too is IBM, where up just 2% ahead of their earnings after the bell as well. Revenues likely to flatline for that particular business, Ed.
Let's get back to Tesla. The stock has also pulled back literally in the last couple of minutes on those headlines from Treasury Secretary Scott Bessent, but still up 7%. Not up on fundamentals or the core of the earnings report, but literally the commentary from Elon Musk that he will pare back time at DOGE and add more time, allocate more time to Tesla. Bloomberg's Craig Tudell, who leads our global coverage of the auto industry, is with us. You and I have been pouring through the commentary on the call and the earnings deck, and there are contradictions in there about the core business. Demand hit from the backlash to DOGE, or is it the brand, or is it something else? Hello.
I do think the first quarter, we absolutely have to acknowledge that the Model Y changeover was disruptive, right? And it's going to take us some time to sort of parse, just how much demand there is for that model. It is, after all, Tesla's most popular far and away, and it's one of the best-selling vehicles in the world. The question is going to be, how much can Tesla rely on that one vehicle, and can it reliably continue to be, sort of a one-trick pony where the Model 3 has been a letdown despite that vehicle getting a makeover recently, and the rest of the lineup is kind of sucking wind. The Cybertruck is not living up to Musk's expectations in the least.
Yeah, significant number in sales down for the Cybertruck, but there is going to be a cheaper Model Y in the first half of this year. That's what helps send the shares higher. So too is the robo-taxi outlook for what's happening in Austin in June. There was real recommitment in certain areas of the business.
Yeah, I do think that there was concern after some reporting by Reuters a few days ago that maybe there was a setback in the timing for more affordable vehicles that they've been, saying will be on the way for the first half. I think there was, not necessarily a full-throated denial of that. There was a comment during the call about, a ramp not going as smoothly as hoped. And I do think that, even the driverless rides that they're going to start in Austin, I think, Musk talked about that, being a pretty limited initial launch of, just a handful of vehicles. So maybe some expectation setting there in light of how, Musk tends to really sort of promise the moon. It's maybe a little surprising to see the shares jump so dramatically, when some of these reasons for sort of being assuaged were, not necessarily full-throated.
Bloomberg's Craig Tudell in London, thank you very much. For more on Tesla, we're joined now by Alexandra Merz, a long-time Tesla shareholder on social platform X. She goes by @TeslaBoomerMama and is seen, frankly, as a leader among the very large group of retail investors that follow the EV maker closer. She's also the CEO and founder of LNF Investor Services. Alexandra, thank you for joining us back on Bloomberg Technology. Let's just start with the basic reaction you have to Elon Musk opening the call saying, starting in May, I will pare back the amount of time spent on DOGE and allocate more time to Tesla.
Thanks for having me, Ed. Yes, with pleasure. Well, first of all, I want to thank Elon for having done the job at DOGE he's been doing. This has been important for any U.S. taxpayer and for anybody that's interested in the United States becoming the power it should be. And he has been stellar in getting this organized, how he is stellar in organizing anything. So I'm really pleased he put some time and effort into this. It's always been clear, both by Elon and by President Trump, that this would be limited in time for his full-time allocation of time. But this is coming to an end in May, which is not surprising at all, other than people who may not have listened. So him dialing it down to 1 to 2 days a week, and do remember, Elon's week is a 7-day week and not a 5-day week. So him dialing it down to 1 to 2 days of DOGE oversight and still being available to it doesn't mean he's completely backing out of it. We are happy as Tesla shareholders that he's going to put more time into Tesla, but frankly, nothing has been delayed or missing the 4 or 5 months that he has now been with DOGE. The launch of the new Model Y simultaneously in 4 factories on 3 continents shows how strong the Tesla team is, whether Elon is in Washington, D.C. or somewhere else in the world. So there is really, there was no concern whatsoever. And people being surprised by the stock going back up, as Greg said, I think they have not watched what Tesla is actually going to accomplish.
Alexandra, something you just said that nothing has been missed. I was also trying to understand there was some contradiction between what Elon Musk said on the demand side and absent of macroeconomic impacts, they don't see an impact to demand. But the CFO Taneja was quite clear about the brand impact in the quarter, the first quarter, and, quote, the changing political landscape having an impact on future sales. I have a question for you from X, from the audience, from one of your fellow community members, essentially, and it asks you, you usually live in California. What is your gauge of, quote, brand damage, given your geography? And that question comes from Farzad.
Yeah, that's a very good question of Farzad. I honestly, here in Santa Barbara, don't see any impact. There are more Teslas out there. I picked up my new Model Y last Saturday, and the Tesla Center was busy. It was crazy, actually. But at the same time, from 10 to 12, there was the typical Saturday morning protestation in front of the Tesla store. Always the same people. They get carried in with buses. At 10 o'clock, they start. At 12 o'clock, they go off. And this will have an impact. This has an impact on people that probably would not have purchased Teslas, but still want to make noise. On the other side, on the upside, there is now a whole new clientele. We're seeing many people that have never considered EVs now considering EVs, and in particular Teslas. And so, it is give and take. I'm not saying it was completely without brand damage, but clearly the overall goal of Tesla, putting real AI on the streets, being the one vector that will be the one transporting anybody and everybody in the next decade, that hasn't been changed in anything.
But Alexandra, they're kind of late to that party, certainly slower than Waymo. I got my Waymo in Arizona just last week. What of the rollout and when it becomes a real business model action here?
That was actually the key phrase I found yesterday in the earnings call, when Elon for the first time quantified when he expects significant revenues from full self-drive, which he said by middle of 2026, and that is just around the corner. So the Waymo model, that was actually really a fun moment, because the whole team there had a good chuckle about Waymo costing way more money. As you know, Waymo is built on other companies' vehicles, is very expensive, and is geofenced. So it is in no way comparable. But no doubt they have done a great service of bringing full self-driving to the masses, and have to be congratulated for. It is in no way comparable what Tesla has. Teslas will work everywhere, as has been proven with the rollout of FSD in China. They had hardly any information on Chinese roads, yet were immediately able to adopt FSD to China.
Alexandra, it's always great to have you on the show. Thank you for articulating so well. Alexandra Merz of LNF Investor Services. Now coming up, Jeff Rosenthal joins us to discuss his new venture capital fund, CIV, backing tech startups, tackling energy and manufacturing. This is Bloomberg Technology. There's a new venture capital fund on the scene, CIV, launching with an inaugural $200 million fund to back startups trying to reshape manufacturing, electrician, compute needs. Jeff Rosenthal, co-founder and managing partner of CIV, joins us now. You've got some big names behind you as well, some real founders in USV, for example. Fred Wilson's on board, Gwynne Shotwell as well of SpaceX. Where are you already allocating the money? Because you've already invested in certain startups.
Yeah, we built this firm for a specific purpose, and that is to back and build companies focused on critical infrastructure and industry here in the U.S. And so that spans digital infrastructure, robotics, AI and compute, really guided by this fast-moving, fast-approaching set of megatrends with AI and compute and the power needs behind it, the reshoring and reindustrialization of global industry following COVID, Ukraine, and now a new administration, and really just the electrification of everything. So we're seeing this inflecting demand, driving this demand and supply, and it now is not only a deep need for our economic well-being, but it's also a national security issue.
Jeff, when did you conceive the idea for the firm and the fund, and when did you start building it? Because clearly this is very much in line with what this administration is trying to do in America with heavy industry of different types.
We started building this firm a couple years ago, and really thinking about the origination of the idea of backing and building in these spaces. I don't think that we could have predicted that these trends would have accelerated to the degree that they have in the last, say, 6 to 12 months across nuclear and critical infrastructure, supply chain, logistics, manufacturing. But we have both a background in investing in these themes, but also building companies in these themes. And so we're not just passive capital. We actually also roll our sleeves up.
I mean, you've invested in SpaceX. Patrick has founded a clean energy business. You've got Abijoy over from Cotu. But what of the thesis on where you invest and how you actually seed, but also co-found businesses like a nuclear business? So what's the recipe here?
Yeah, so we're principally an investment firm. We spend the majority of our time and capital really identifying and then earning the right to back the best founders. When we have a really defined thesis, a real right to win, and a partner who is going to lead that business as the active co-founder and CEO, only then will we co-found businesses on platforms. So before we raised any outside capital, really to prove the thesis to ourselves, we made 6 investments. 5 were direct investments in companies like Base Power, Crux, Verse, Senra Systems. And then our first build company, as you mentioned, we co-founded the Nuclear Company, which is a fleet-scale nuclear developer really powering AI in large-scale industry here in the United States.
Jeff, manufacturing and growing manufacturing requires capital. It's expensive. You're looking at the early stage. So what are the innovations that you hope to find that, I guess, lower the cost of doing business in this country or something of that effect?
Yeah, absolutely. I think that when you look at just the cost of doing business in this country, when we think about the reshoring of heavy industry or critical industry, one of the things that people will point to as a major challenge is just the cost of labor. And I think that there's a lot of technological innovation across robotics and AI that gives us confidence that that is something that we will be able to compete on a global scale here domestically. The beauty of many of these businesses compared to, say, traditional venture capital, Silicon Valley style software companies is that they scale often with non-dilutive capital. So we focus on businesses that are actually highly efficient to equity and then can scale with asset capital or debt.
Jeff Rosenthal, CIV co-founder and managing partner, thank you for joining us here on the show. Now, coming up, Cantor Fitzgerald teams up with Tether and SoftBank to create 21 Capital, which will accumulate Bitcoin similarly to Michael Saylor's strategy. We discuss with CEO Jack Mallers. That's next. This is Bloomberg Technology.
Crypto news. Cantor Fitzgerald is teaming up with Tether and SoftBank to create a new crypto company called 21 Capital. It's going to be accumulating Bitcoin in a similar fashion to, say, that of Michael Saylor's strategy. Plans to launch with more than 42,000 Bitcoin, of course, worth more than $4 billion. And Jack Mallers is also co-founder. He's CEO of 21 Capital, and he joins us now. We usually have you on because of strike.
You're getting me fired up. How you doing, Caroline? Good to see you.
Jack, when did this idea come to be?
The founding story. So I co-founded the business with Tether. I would say I've known the Tether group for over a decade. There just weren't that many Bitcoiners around over 10 years ago. So we've done a lot of work together in El Salvador, et cetera. We've been so inspired by Michael Saylor and all of the public companies acquiring Bitcoin. But I would say over the last few years, that inspiration turned into what we thought was an opportunity and a hole in the market that we could deliver on, which is bringing blue chip credibility and startup upside. We feel like we can bring enough capital and be big enough to win. We're small enough to grow. And most importantly, a pure Bitcoin business. A lot of these companies, they're pivoting from a past operating business. They're rebranding, changing their name. They're maybe selling video games to buy Bitcoin or selling medical equipment to buy Bitcoin. Right. And we're a purpose-built Bitcoin company. We're going to build Bitcoin products, Bitcoin cash flow, and we're going to give Bitcoin per share growth to shareholders and be hopefully the best way for investors to get Bitcoin exposure in the public markets.
Jack, I think off camera, just before we started, you used the word vehicle, a vehicle for Bitcoin. I think like a reasonable question that people have is, what does the CEO of a new company whose mission is to accumulate Bitcoin do day to day? Like, what is it that you're going to try and manage or achieve?
Yeah, so for all the Bitcoiners out there, we encourage you to check out our filing. We've introduced 2 new metrics to the public markets. One is BPS, stands for Bitcoin per share, as opposed to earnings per share. And the other is BRR, which stands for Bitcoin return rate. And my job and what I'm dedicated to do for our shareholders, in which we view similar to our customers, is grow our Bitcoin per share. So we're an operating company. And when you buy a share of 21, in a hypothetical sense, what we intend to do is, let's say our Bitcoin per share is 0.05. Our intent is to be able to grow that to 0.06 Bitcoin per share, 0.07 Bitcoin per share. Where a vehicle like an ETF, your exposure is static. So 21's an operating business, and we will be building Bitcoin products, Bitcoin operative cash flow, and then using the capital markets to accretively grow the Bitcoin on our balance sheet. So we want our shareholders to get wealthier, get richer in Bitcoin terms, and our metrics encourage the market to view us not in fiat terms, in Bitcoin terms, because we're not here to necessarily beat the market. We're here to build a new one and encourage the world to adopt Bitcoin in a sense that we believe it hasn't yet.
But Jack, you already have a Bitcoin product, and it's Strike.
Yes.
And it's where people can buy, sell, store their crypto. What happens to that? Are you still going to be leading that business?
Yeah, I'm the CEO of both companies. We're actually disclosing today at Strike some of our financials. So Strike, immensely profitable. We have over 20% EBITDA margin, 85% gross profit margin. We have only 75 employees. So on a gross or net profit per employee basis, we got to be one of, if not, the biggest in the Bitcoin space in that regard. And so it's an incredibly strong business. It's doing well. I'm so proud of the employees and our investors and thankful for our customers. And, Caroline, you can just do things. And I'm going to lead both businesses. I truly believe my purpose on this planet is to try and help Bitcoin have a chance to change the world in what I believe is the right direction. And I think Strike and 21 both independently work towards that.
Jack, you have plans to raise capital, and I guess not just like as a one-off, over time raise capital, right? How will that work in practice? What mechanisms will you use? And a lot of people that watch the show ask if they're not registered institutional investors, how can they participate in that?
Yes. I thought for a second you were going to offer me some money to buy some Bitcoin.
Absolutely not. Absolutely not.
I'm kidding, man.
Go with my actual question.
No,
yeah.
Totally. So listen, we are hopeful to have our shares listed on a stock exchange under the ticker XXI. Today, we are trading under CEP, which Caroline mentioned is our Cantor Equity Partners, and that stock is trading in live today. If it's successfully merged upon closing, it will be XXI. We do intend to raise as much capital as we possibly can to acquire Bitcoin. Again, my one rule to my shareholders is it will be accretive. Our Bitcoin per share will grow. We will never have Bitcoin per share negative. At least that's our intent. Our intent is to make sure that when you're a shareholder of 21, that you're getting wealthier in Bitcoin terms. And that's my job as a CEO to deliver that. So we plan on raising capital in all different type of sectors and markets and really blending Bitcoin and incorporating it in the traditional financial system to deliver a powerful equity to the public markets for Bitcoiners.
Is that the selling point versus ETFs? Because you came up with this idea over the course of years. And since that time, there's not just been strategy that you can invest in or block, but you can get spot Bitcoin ETFs.
Yeah.
What's the upside? And in fact, a viewer from Bloomberg's asking, how can you have more BIPs than an ETF?
Right, okay. So I gotta be clear, I'm not preaching a future that I can promise. This is hypothetical and this is our intent. Somewhere my lawyers are like, that's our guy, right? But our intent, Caroline, is that when you buy a share of 21, and let's say that's 0.005 Bitcoin per share, we go out and we intend to close deals, build products, add Bitcoin to our treasury to where in which you get a press release and you say, wow, 21's Bitcoin per share grew from 0.05 to 0.06. I just got more Bitcoin exposure. I got wealthier in Bitcoin terms just by being a shareholder of this company. An ETF is not an operating company. IBIT isn't outgrowing your exposure to Bitcoin. It's a static exposure through their security instrument. Whereas for us, we're a business. I'm a CEO. Right. I get up, I work every day to grow how much Bitcoin your share represents on our balance sheet. That's the big difference.
21 Capital CEO Jack Mallers and Strike CEO. Great to have you back on the show.
Good to see you, brother.
And that does it for this edition of Bloomberg Technology. A busy one, Ed.
Yeah, let's just quickly look at some of the names we care about. Tesla, it's up because Elon Musk has pledged to return to Tesla, less time at DOGE. Intel, Bloomberg reporting, is cutting 20% of staff, getting focused on tech, cutting out middle management. And the market broadly has pulled back, right, Caro, since those Besant heads, but there's green on that screen.
Green on the screen as we anticipate IBM, ServiceNow earnings, and of course, we've got Intel tomorrow. Don't forget to check out our podcast. You can find it on the terminal, as well as online on Apple, Spotify, and iHeart. This is Bloomberg Technology.